Welcome to this week's weekly technical analysis video. My name is Joel Chandran, a lecturer here at Train to Invest. We're going to take a look at the TSX, our Focus 5 stocks, gold, silver, oil, and few corresponding ETFs for the week of July 15th to 19th. And we'll start with the 3-year weekly chart of the Toronto Stock Exchange. Now, looking at indicators themselves, we see the MACD. We're at an inflection point here. We could go, again, obviously up or down. But looking at the momentum, it seems to say that we have a lot of room to move higher. And we could see this cross over next week. As you can see, 1, 2, 3, 4 weeks of an uptrend. On this week, we closed higher than we opened. So again, another positive identification that we are going to have another strong week when combined with looking at the technicals here. We're sitting at above 12.5, which is a good sign because this is, again, a strong level of support with lots of room to grow to 13,000. So looking at next week, we should see a strong week again, and we could even push back to 13,000 sometime during the week. This is the 6-month daily chart, and I've drawn some support and resistance lines for the uptrend. On Friday, we closed higher than we opened. We also closed higher for the week. So that's definitely a strong sign for next week. Hopefully, without any unforeseen news, we'll continue to see the continued uptrend. MACD and the MACD histogram, while having a less significance here in the short term, continue to stay high. Histogram bars have been fairly the same height, which is good. Continues to push our trend higher. Looking at the momentum side of things, RSI continues to slope higher, reaching the high end of the 30 to 70 range. But if we break through that and we continue on this slow uptrend, it will mean that the index has continued to push higher. Looking at the stochastic, we're hitting the 100 mark, so we can't go any higher. And as you'll notice, when we have strong uptrends like this, once they've hit that high mark, they don't move lower. They just kind of stay there. So that's why you see it's flat, but I gave it green because we're still in the uptrend. So things are looking good on the TSX. We will expect to see continued strength next week. This is the chart of oil, 6-month daily chart. Up $13 and change, or almost 14% actually over the last 6 months. So we started at about 95, now we're about 108. Great pricing, strong push for oil stocks. This is Enbridge. We saw maybe about a month ago, almost 6 weeks, we saw the wonderful, wonderful downcline. But that's given us a great buying opportunity. As you can see, it went from $42.50 over the last 5 weeks to just under $47.50. $5 almost in 5 weeks. Pretty good return. Looking at the MACD and the MACD histogram bars are shrinking. Always a positive sign, because on the negative side, we want convergence. We want that to turn around quickly. On the positive side, we want divergence. You want to see the continued separation of the two lines. Starting to turn around here, moving towards a convergence point, and that's definitely due to this 1, 2, 3, 4 weeks of solid uptrend. Looking at momentum, stochastic still has lots of room to grow here, and a very steep uptrend. RSI, again, just under 60, lots of room before it hits 70. We could be seeing more good things from Enbridge. Simply looking at the 6-month daily chart, I drew some support and resistance lines for this uptrend as well. On Thursday, we kind of reached the high of the uptrend. Friday, we did close higher than we opened, but again, we're still lower than the high of Thursday. What does this mean? Looking at our stochastic, we do see a bit of momentum being pulled away, definitely due to this downward stay here. RSI isn't so easily swayed, still in the blue. but MACD and histogram continue to show strong uptrends. We break through the support line of the uptrend. We know it's time to bail on the stock for a bit. I would see if it touches 60, wouldn't be as worried, but if it breaks through 60, we know for sure the trend is broken. Time to move on. So 47 here is a tough line for it to break through, but once obviously it breaks through, no problem going to 48 and even 49. With continued support in the oil industry and by higher oil prices, this could be a good run-up for Enbridge once again. But again, do not be suckered in and expect it just to break through 47. It comes back down, breaks through 46, you got to cut your ties. IMO, the 3-year weekly chart, as you can see, 1, 2, 3, 4 weeks of sustained uptrends, closed higher than it opened, just barely, but again, higher than it closed the week before. Definitely a good sign. As you can see, you do have a MACD crossover, I would say about here, at this right around here. We do see that turn higher. MACD histogram bars growing week by week, definitely a positive sign. You want to see these two lines move into the positive side of things above the 0 line, and that will be definitely a stronger indicator that momentum or that there's strength in the stock. Looking at the momentum side of things, we do have a bit of momentum leaving, and that's obviously due to it trying to break through 45 and not being able to, but RSI isn't easily swayed, continues to move higher. So we could see a bit of a pullback initially with the week ending with strong numbers. This is a 6-month daily chart. Definite uptrend again. Closed here at the 44. So if we see next week it opens below 44, we know the trend is broken and that we should bail on the stock. Remember, you don't need to be married to a stock. Take some profits when you can, and then wait for the next buying opportunity. Over the last 2.5, 3 weeks, it's been an indefinite uptrend, going from pretty much 39 to 44.50. It's a great run. It looks like it could be coming to an end here, but we'll have to wait and see. Remember, if it breaks through 44, you're out. Momentum, definitely leaving the stock because it closed lower than it opened on Friday. MACD is starting to converge on the positive side. As you can see, the histogram bars are shrinking, indicating that the move is slowing down. Suncor, 3-year weekly chart. Again, very range bound. You can see quite easily the 27.50 to about 35. To be even safe, you could say 32.50. So that's a good $5 range. And if you want to stretch it out, you could say 7. While there's not a lot of that same peak or uptrend, you do know it's consistently making money. Here we have it closing above 32.50 for the week, which is a good sign, as it did last week. MACD, green. Histogram bars, while it might be hard to see, are growing. Good sign. Steep uptrend here on the RSI, or the stochastic, which is good. RSI is steeper than Enbridge and IMO. Another good sign, heading towards the 70 mark there. So positive signs here on the oil stocks. Looking at the 6-month daily chart, tough time breaking through 33. Well, it's positive to see that on Friday, we closed higher than we opened. Momentum, both are showing that. And if we're able to break through this 33, I can easily see us going to 35. Due to this gap down here, we'll fill that gap first. But I can see us breaking through 34 and potentially reaching 35 if things stay the same. Bearing some unforeseen news, things are looking good for Suncor, especially with the whole Middle East thing in Egypt settling down. Remember, Suncor has its expansion all across the world now due to its acquisition of Petro-Canada. So remember that some of the external global factors will impact Suncor in ways it won't for Enbridge and IMO. But again, stronger oil prices will definitely help push Suncor higher, And if you've read the news recently, you know that Suncor is back to full oil sands production after the flooding in Calgary and stuff like that. So could see stuff moving higher for Suncor. And if you're able to break through 33, we're definitely going to go to 34 and higher. Royal Bank, an astounding chart here for the banks this week. Big gap. Started at 62.50, closed above 65, so $2.50 this week. Great appreciation. Also posting a 3-year weekly high. So I am a little concerned about it setting a new 52-week high, but it's being supported by a MACD crossover. We have our first histogram positive bar in about 20 weeks, which is massive, a very strong indicator. You can definitely see stochastic has reached the 100 mark, and it's not going to go any higher. It's definitely a strong uptrend. RSI has broken through 60, heading towards 70, and we could see it even push past 70 for a bit while longer. So I would expect potentially for there to be a pullback, but due to the good mortgage news and home sales being higher than expected, it definitely jumped. I would expect a bit of a pullback before moving higher potentially. This is a 6-month daily chart, and you can see highest price has been closed over the last 6 months. Closed above 65, hasn't seen 65 ever in the last 6 months. Really a strong uptrend, but we need to be careful. MACD obviously is in love with it. RSI is flat because we're bouncing on the resistance point of the uptrend. Stochastic obviously is at 100, so we can't really read that into that too much. But again, strong numbers. We could see it pull back down to 64, which is fine. Still hasn't broken through the uptrend. But if it breaks through 63, you know the uptrend is over, and it's time to get out. So if you're worried about losing profits, now might be the time to take them if we don't see the stock move higher over the next couple of days. I mean, take a look at PD, same sort of thing. However, looking at the MACD histogram, we do see there has been a month worth of positive histogram bars. The MACD signal line is above the 0 line, showing a stronger show of strength. 1, 2, 3, 4 weeks of positive movement. Again, closing higher than we opened. But the difference here is that we've closed just under 88. And the last time we closed anywhere north of 86 was just barely above 86. So there's a bigger gap here between the highs of Royal Bank and the highs of TD. What does that indicate? The movement may be greater, but the fall could be quicker as well. So that's something to watch out for. Momentum showing strong signs of investors pulling into the stock. Again, when we take a look at the closer side of things, 6-month daily chart, opened, closed here, broke through 88, but pulled back a little bit when we closed. Obviously, people were taking profits. I've drawn support and resistance for the uptrend here. If it breaks through 86, you know it's time to go. Using these data figures, I could see it pulling back to around here before turning back, assuming things stay the same. MACD obviously is in love with it. RSI has flattened out due to the pullback, and you can see the momentum crossing down here. So TD to be more of a candidate to sell before Royal Bank does, simply because we went from 85 to 88, $3 quite quickly. Bigger run up. But again, we'll see. From 81 to 88 has been a phenomenal ride, and if you've been able to hold on to it for that long, good on you. It's time to let go, though. If things start to turn south, do not be afraid to get out. This is the price of gold over the last 6 months. As you can see, overall, the trend is still down. We've lost about $390 per ounce over the last 6 months, or 23%. However, it's off from its lows. We've had a rebound over the last let's say month or so. End of June, we're almost at the end of July here. The last month we've seen it jump $100, which is a good sign, not necessarily for gold stocks themselves, but for the ETFs. But if we continue to see this as an uptrend, it will change the way we're looking at ETFs because we may start to want to jump into the bull plus ETFs instead of the bear plus ETFs. It could be a time for gold to turn higher and make a run. If we're able to make it back to 1600, that would be phenomenal. CGL follows the price of gold religiously. As you can see, as gold has risen, so has CGL. Not necessarily at the same rate, but once gold starts on its uptrend, you will see this ETF start to grow as people start buying it again. Here we have MACD histogram and the MACD line, both green, both positive. Again, we want to see this come back into the positive side of things. It hasn't been very positive in the last 6 months, but that's because we've seen gold prices have been quite depressed. Stochastic crossing here, good sign. See the RSI heading higher, definitely a good sign. Closed higher than opened on Friday. Not a lot of movement, but there's still movement there. The highest is closed in a couple of weeks. A good sign for EGL. Looking at the gold plus ETF, the gold bull plus ETF, HGU. Again, not a lot of movement, but movement there indeed. Closed higher than it did on Friday. Still having trouble breaking through this $10 mark, but from $7.50 to $10, it's a good range there. MACD and the MACD histogram looking positive. What's more impressive actually is the RSI and stochastic. Both strong, trend higher, moving forward. And as gold prices continue to rise, you will see this ETF continue to grow. However, the gold bear plus ETF, which goes on the negative side of things, we've seen that consistent downtrend over the last couple of weeks, especially as gold prices have rebounded. We saw that initial rebound, and then it collapsed, so these prices went higher. Now as we're rebounding again, prices are being forced down. Closed lower and opened on Friday, definitely below the 2250 mark. Bad news all around for indicators. So they're saying, stay away. And as gold continues to appreciate, this ETF is going to suffer. And that's because it's a bear plus ETF. So we can see that with silver as well. Prices haven't quite rebounded the same way. With gold, we kind of saw a greater uptrend. Silver prices have remained depressed. They've tried to break through the $20 mark, couldn't do it, and again, turned back higher a little bit, just a little bit. For the last 6 months, it's down almost 39%, so a much further drop than gold, which is about 24%, and it's lost almost $12.50 per ounce. Looking at SVR, which follows the price of silver. Again, not a ton of movement here on the right-hand side of the screen. As you'll notice, very, very flat bars. Inflection point, I expect this to cross lower as silver prices remain depressed. RSI, again, is fairly flat. I expect it to remain flat for the rest of the week. Not a lot of strength here on the lagging indicators. But again, SVR follows silver prices, and silver prices really haven't moved significantly over the last 6 months, at least in a positive way. With the gold, we're seeing the rebound. It's moved $100 an ounce. Silver can't seem to get any appreciation going right now. Looking at the bull plus ETF for silver, HGU, positive crossover, starting to turn higher. MACD histogram aren't quite sold, but they are positive. Kind of hard to see, but again, prices are fairly flat. Once you break through the $8 mark, then we should really pay attention to it. But again, it depends on how you're using the ETFs. Looking to make 1%, not necessarily the best thing. Looking to hedge against inflation could be a good time to get in. Bear plus ETF, again, mixed signals because prices aren't really moving strong in one direction. Again, lower than 10. We haven't been able to crack 10 for the last 8 working days, so almost 2 weeks now. RSI could have given it a red, give it the benefit of doubt of blue. Again, we're at an inflection point here. I would expect it to turn back down as silver prices remain depressed. So that's it for us this week. I hope you enjoyed our video. If you have any questions, concerns, comments, you can either leave them on the blog or email me at joelchandran@traintoinvest.com. I would love to hear from you guys. Please check us out here at www.traintoinvest.com and look at the course that we offer for you. And if you want to learn how to trade in the stock market, this is the way to go. So that's it for us this week. We'll talk to you later. Bye now.
The organizer has entered